Hey guys, this is Simon with Trade and Perform Coaching doing the trade review for Friday the 29th of June. I did most of the trading up until about noon time. I actually stayed on live. I'd opened the room up to the public. So this is really just going to kind of be a postscript to that. A couple of things I noted early in the morning. First of all, it is still grinding extremely slowly to the upside. Just to give a quick graphic of that, you can see here. Okay, you can just see this has just gone from where we had beautiful, nice, fat ranges. It was easy to make money. We've just been grinding now, and it's really going back almost two weeks. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. We're almost at 2 full weeks of grinding, and that's not unusual to get this kind of scenario. As a matter of fact, it's gone for as much as 3 or 4 weeks before in the past. So when we're in this scenario, my objectives are always the same. Okay, my style of trading requires that we have at least a little bit of two-sided market action. We don't have that right now. So my first course of action is to slow down the amount of trades I'm taking. Secondly, letting the market come to me. Third of all, realizing my objective is to simply get through this period of time. There's a huge difference in the mentality, right? When you have to make money, your hand is forced. You have to find a way to trade. When you don't have to make money, right, you can just look at the market and say, okay, either it comes to me or it doesn't. I don't care one way or the other. So what was the first thing that we wanted to identify? First of all, we were concerned with open drive higher. And if we look on the 5-minute, we did not have a open drive higher. We clearly got down to the downside, right? We came down to Globex slow. Now, I said specifically, there is a scalp trade at Globex slow, but I said specifically I wasn't taking the trade at Globex slow because I felt that it landed in simply a poorly auctioned area, and I was going to skip. My target for a long was actually either 1911 or preferably 1909 to 1907, one of the two, neither of which the market had given me. Normally, in a more active market and a more two-sided market, this Globex slow probably would have pushed closer down to this 1911 and actually created a zone for me, and I would have been more comfortable taking a long from that point. Vice versa. If you'll go back and watch, actually, I did not post the live trading session, but I do have it. Anyone who would like to see a copy of that, and it was fairly dull, but you're welcome to see it because it did set up the 2 winning trades that I had. Actually, I had 1 loser and 3 winners on Friday. So it did set up the 3 winning trades, and it showed exactly how, even in a very, for lack of a better word, obtuse market, something that doesn't give you a lot of clues, it's kind of just floating out there and there's not a lot of clarity, it still gave us the opportunities that we needed. But the only way I was able to capture those opportunities was by following my process as opposed to being able to read the trade action, which right now is virtually impossible for me because it's so slow. So the first thing I pointed out was that in the morning, that it really appeared like they were trying to sucker people in to the downside, both in ES, right? See how we just kind of floated down here? We weren't able to get gap fill very quickly. We were getting rejected actually out of half gap, as tiny as that was. And, I noted when you're an emotional trader or you're looking at that, there's plenty of people who just went, wow, look, we must be about to tank, right? Everyone thinks when the market keeps running up and up and up, everyone's looking for a correction. We must be about to tank. And it suckered all these people in down here to the short side, at least from my point of view. I don't have any actual empirical evidence of that, right? But then you can see after we sat down here for an extended period of time, and finally we popped. What do? We popped, and we forced all those people to cover. Quite logical, right? We've had a compacted trading range, right? And so you can see the bottom of the range here was 1914. The top was 1919. So the other thing that should be telling you is 5 points of range. Now, I'm used to seeing 5 points of range in the first bar, right? If you go back 3 weeks ago. So 5 points of range over the first hour or over the entire day is nothing much to get excited about, okay? And furthermore, it makes the target of getting those 2 points even more challenging. Okay, so keep all of that in mind when you're trading right now. This is a harder environment. We need two-sided markets to make day trading and scalping work. Particularly, the other difficulty is with when we're doing these slow grinds is that shorts from traps, which are generally, traps are set at prior day's high, Globex high, traps can be set at first hour high, right? But those traps are going to, trap trades fail more readily than zone trades do. And secondly, right, by virtue that we're just grinding up, the short trade is going to set up more than the long side trap trades are going to set up. What that's going to do is it's going to produce a fair number of losers at those trap trades at the high, right? You have to put that in as a function of your calculation as to whether or not you want to take the trade. So all of that being said, the other thing to note here was that the tick, as I point out every single day, was plus 500, minus 500 almost all day long. That means we're in balance. What are the characteristics of a balanced market? You need to know that so that you can trade it properly. But generally speaking, balanced markets head fake when they break out, right? And they head fake when they break down. Okay, so let's run through the scenario. I did not get a long in ES in the morning. Instead, I had chosen to take the long on NQ. Again, I did that live, and if anyone wants to see that recording, just hit me at tradingperform@gmail.com. I'll be happy to drop you a copy of the file, or hit me on Skype if you're one of my coaching clients. And but I'm not going to post it to the blog. It's too big, and I don't feel like editing it down. Excuse me. Let's go to NQ really quick, since it's our take the trade. So the econ had come out at 8:55, the last piece of econ. I noted again that I thought that they were sucking people back in to the downside here. And when we finally got this pop, we'd set a new low and pop back up. I believe I took the long. I can't swear to it. Again, I'll have to go back and look in the video. I don't even have my trade sheets out here, but I believe I took it at 37.32 or 37.33, and I was able to scale for plus 4 and plus, I want to say plus 4 and plus 5 is where I was able to scale, but and then I was able to move stops up and just tag that out, break even. It made for a small trade. They may have been 3 and 4 point scales instead of 4 and 5. Again, I don't remember exactly, but I took the trade live at any rate, and they were profitable. I was able to get 2 scales off, and then I was stopped on the last little portion, right? Then when we came up through here, okay, so trap trade set up in this area, and I basically set a stop on this trap trade. The trap trade triggered here. This is a B-grade trap trade. Without going immensely into details, I took the short here, and at the same time, a short on the trap trade set up in ES, and I took the trade to the short side in ES, right approximately, I want to say it was at about 1918 approximately, okay, and right about this time frame right here, right near the bottom. It was when we were approaching that 915, 930 area, okay? The stop was one point above the swing high. Now, as you can tell immediately, first of all, there was 2 components. The 1 point stop never got tagged through all of this, and we're close. I did point out once we'd come back down through this period and we had gotten into this 1030 area here, that specifically right here, I said, look, the trade's taken a long, long time. Usually after I'm in a trade for an hour, I've already gotten my 2 points. In both on NQ and ES, I said, if you want to get out of the trade at this point, right, and you're going to get upset that you get tagged out, fine. Close the trade out here flat. You've given it an hour. That's more than enough time. It's just a slow, grindy market, right? And the same thing with NQ. I'll point out where that was right here on NQ. And again, this would make more sense if you were in the room when I was doing the trade review, but in NQ, trade was taken at approximately the same time, which was right in this area. I think right here is where I took the trade, and then again the stop was 1 point behind. Again, as we approached this, let me think through this process here real quick and see if I got it right. Where did I take this trade? First time in, rejected. Okay, now I got it. Excuse me, I stand corrected. So the trade was taken right here, right in here. The stop was 1 point behind. It did not get tagged out here. As a matter of fact, I pointed this out as we approached 10 o'clock. I apologize. It's a couple days later, so remembering exact details is harder. But I had warned again, if you wanted to get out of the trade, usually we're able to scale a 3 or 4 point scale at that point. We were unable to get that. And then you can see the first time through, it came back out and tagged this trade out. Now, I don't care about getting tagged out on this trade. I'm quite comfortable. I know my stats on it. And again, where I want to go with this is, as you're building a portfolio of trades and you're building your statistics on your trades and you know what your win ratio is, you care less and less about any one trade and more about following the process. The reason that's important. So first of all, if you did not cover, okay, you clearly got stopped on this trade right here. I believe it was anywhere from a 3 to 5 point stop, depending on where you took the trade, right? This trade set back up again right here, and I called this in the room, live, real time. I shorted 37.35, and then I shorted, I increased the position at 37.37, and I called that in real time. Took a little bit of heat, but again, the stop went, again, exact same thing. I had the stop 1 point behind here, as you can see. It never got tagged. And then, actually, okay, and what's important here is if you'd been in the room, I gave up on the trade. I simply assumed that I'd entered this trade 2 times. I was about to I took my first stop here, and I was about to have a second stop here. Now, if I panicked on this trade and I said, you know what, screw it, I'm not going to donate an extra point, I'm not going to follow my rules, I'm not going to stay with the stop, I would have ended up taking a loss here, right? And it would have been a loss based on emotion, based on what I was seeing, right? And what I said was, I'm going to go to lunch, my stop's in place. Instead, what I defaulted back to is my process, that has kept me safe for long periods of time, right? And in that process, I took off, and I started driving to lunch. And when I got to my lunch destination, a couple minutes later, somewhere, I believe I was probably right in here, I get my phone, pull up my quotes, and then I go, holy cow, I'm making money. Now, emotionally, I would have stopped this trade out here. Process-wise, it called for me to simply respect my stop 1 point behind. That allowed me to make, I think I made 13 and 17 points on 13 on one half, 17 on the other half, right? In ES, the exact same process, right? Notice emotionally, I would have wanted to cover when it took forever, okay, through this entire process. But if I go back to my stats and I ignore how long it took, and I just look at my stats, I know that that was a solid trade setup, okay, and I know that if I took that trade every time and didn't have to deal with emotions or time or frustration or anything else, that I have an overwhelming win rate in that trade. Okay, so at this point, I had taken the trade, I believe somewhere here in, near 1918, I want to say. At this point, from 1918, it had traveled down to 1916. Okay, now I had taken 2.5 points, 2 or 2.5 points on my first scale. But then what I decided was, well, I want to see if we can actually get a roll to the downside, and this is where I made a mistake. And I'm going to show you in just a second. Okay, so first of all, we were showing balance, so guessing that we were going to break out of balance. Even on this rollover, I didn't have the ability to look on the tick. I would have seen that we were not sustaining a significantly negative tick, and I should have covered the entire trade. As it was, my stop was still 1 point behind here, which ended up getting tagged out right in this mess. No big deal. I think I ended up losing a tick on the trade as a whole. Okay, I only took half of it down here, ran all the way back up against me. What I missed, because I wasn't in front of my computer screen, was the move into Globex lows on NQ. Guys, this is a fantastic setup. It's a great risk reward. This right here, I missed it. I just wasn't in front of my screen to see it. Had I would have flipped that trade entirely. I did cover because 15 points has been about the biggest stretch we've gotten on NQ for days now. Okay, so I wasn't going to try and push and see if I can get 20 or 30. I was very grateful to get that money and put it in my pocket. So net, the way that it worked out was stop. Okay, I got a long for 3 or 4 points in the morning. I took a stop for either 4 or 5 points on NQ, and then I had a win in NQ for I believe it was 15 and 17 points or 13 and 17 points. And then I ended up taking half the trade. I ended up getting 2.5 on my ES short, and then I took a stop on the second portion for -2 3/4, I believe it ended up being. So, But net, look, the net, when you wipe everything else away, right, I ended up making between 13 and 17 points on all my NQ contracts. So if you do the math on that, right, that's pretty close to $300 a contract on average, right? That's pretty damn good money. I'll take that any day of the week. And the point of all that is, not that I made the money, the point of all that is I stuck to my process. I didn't get overly active in this stuff. I didn't have a sense of desperation. And when I took the trade here, right, when I took the trade in this area, I already knew that it was a slow market. I adjusted my size down. Oh, that's another key. I adjusted my size down due to the slower pace. I accepted the fact that when I entered the trade that I was going to get a stop, okay? And once I took the stop, then once I accepted the stop, I was able to accept that I could just leave that alone and see if the market would work itself out. Because the fact of the matter is, no one knew when we were up here, okay, you could have said one of two things. Man, we're just grinding in a straight-up market, and I'm not going to short this, which was totally acceptable, right? Or you can say if you decided to take the trade, I guess is the point, you have to be committed to being in the trade, right, and having some kind of trade parameters you're going to follow that are different than just I feel it's going to work or I feel it's not going to work, okay? Because our feelings deceive us, and the reason our feelings deceive us is because the market's constantly switching pace, and that is what throws off the emotional part of the trade. So, anyways, I hope this helped. This was a follow-up. I wish I'd been in front of my computer screen to see this. It would have been nice to get paid a second time on the way back up. I didn't see it. But that's cool because guess what? Market opens again tomorrow. There's new opportunities. I am still in the caution mode, okay? This market continued to grind for a whole nother week, okay? I'm not going to be overly eager to step in. And then I'm also keenly aware. The best opportunity, I think, is not going to come on the first down day. As a matter of fact, we are huge and primed for having a trend day down. One day sell. That'll be followed by the next day a reversal. Okay, and I'm really keen off of what comes after that first down day, right? That's where I think I'll really get paid extremely well. My goal on that first, if we open with a trend day open drive lower, right, is simply not to take a series of stops in that'll set me back, and then I'll need a couple of good days to get paid back. Instead, I'm keenly aware that we have one of those days that are going to come up and pay us. Okay, it's coming down the pike. That we're due a trend day down, but I'm also aware that trying to set up for that trend day down by itself and simply anticipating and saying we have to have it will get me in trouble. If I get set up, okay, like I did here, and I take the trade on reduced size and it works out, that's great. If I can get some longs, which is hard, right? I'd rather get a nice stretch to the downside before I take a long. That'll be great too, but I also know that the market will switch back. Going back to this other chart, okay, and it's important to see it. So I'm going to show it again. The market goes, this is normal, the market goes through periods like this, okay? We're already starting to get more of a sideways action than a straight up action, which has been revealed in having profitable days the last couple of days. You can see that. I would expect this to start to increase on both sides, okay? And if we look back just a little ways, right, we can see not too long ago, we had this exact type of scenario to the upside, and then it broke out and gave us almost 2 months of really solid trading through all of this. So don't freak out. Keep your head on. Making money is about following, and trading, day trading specifically, is about following a process. It's not about reading the market, okay? People overhype reading price action. They overhype trying to get a macro read and then apply it to a micro situation. Okay, the market will tell us when it's ready to give us the trades. Our job is to protect our emotional capital, our actual trading capital, right? And to be focused and prepared for a range to expand on both sides of the trade, meaning to the downside and to the upside. It's getting more volatile, so we don't get caught off guard. Anyways, I hope everyone's having a great weekend. We'll talk to you bright and early tomorrow morning. We'll see you soon.